Hello guys, what's up? Welcome to my YouTube channel. Today I'm going to be teaching you guys the part 2 of this course and this series, how to trade forex, volatility 75, 1S index, any derived synthetic indices assets, or forex pairs or metals such as gold, using the advanced SNR called Malaysian SNR strategy. So before I start this video, first of all, I want to thank Lord Jesus, my Lord and Savior, for giving me this opportunity to bring to you guys this video today. All right, so let's do a little bit of recap from our last video. I taught you guys on our zones, that is the type of SNR. The first SNR that we have is the classical SNR, buy and sell, buy and sell, and the sell and buy, the sell and buy. The second SNR we have is the what do we call it, the open close or the kissing candle. This is the open close when you have a sell or you have a buy. As you can see, support and resistance zones are everywhere in our chart, and I hope you guys went to your charts and check all those zones that I taught you guys about last week. I hope you guys are engaged and are following this. Okay, after that I taught you guys about the left shoulder. This is the left shoulder. You know, the left shoulder is also the head and shoulder pattern. The buy, the sell, the buy, it breaks down this level, then this level right here, it breaks it, it comes down, then it goes up again, breaking this level, giving us the head, and this is the shoulder, also called the LHS, left hand shoulder. Then we can just draw our trend line or our line here and, you know, get an entry from this zone, sort of. But we're not talking about entry right now. We are only talking about SNR. So today I'm going to be teaching you guys on rejections and tested and untested zones, because once you get the rejection and the tested and untested zones, then we are going to look I'm going to be teaching you guys on how to find the direction of the market for the weekly and the daily and all those buyers and stuff. So first of all, I want us to know what a wick is. A wick can be defined as an area of a candle that, you know, when is a situation where a candle buys and sells and closes. Yeah, let's say for instance the candle, you know, for instance, the candle buy up and it sells and it closes here. Then this region right here is what we call the wick of the candle. I'll show you guys right here. So in simple terms, in simple layman's terms, this is the wick of the candle. Let me show you guys. This is the wick control. This is the wick of the candle. Look at this place. Let me mark the zone up with boxes. Let me mark the wicks with boxes, rectangle. So anywhere in your chart that you see something like this, you know that it is a wick. I know a lot of you will know what a wick is, but in case you do not know, I'm just using my box to mark up the wick. Look at a wick right here. This is a wick right here. Look at this place, is a wick. Let me mark up this other wick zone that I can find. Let me find another wick zone. This is a wick too. This zone, I'm not sure you guys are getting it. Let me explain it properly. This is a wick horizontal line. You see from here, look at this candle here, this candle that my cursor is on, this red candle, from this region to this region is a wick, is the wick of that candle. So when you don't see, if you look at your chart and you don't see this full red body, this box, this red box, where you don't see this red box, where you see the line above or below the red box, know that is your wick. That is just the most simple explanation I can give you guys about a wick. So you have your wick right there. Let's check for another place where we can see a wick. Control. You can see a wick right here too. This is a wick. Let's look for a buy candle. This is a buy candle, so this zone is a wick. From this zone to this zone is a wick. That's the simple explanation of what a wick is. I'm showing you guys the practical explanation so you guys can have a full understanding of what I'm trying to talk about. Now that I've talked about wicks in the candle, I want you guys to go to your chart and identify the wick. If you guys do not understand what a wick still is, you can comment on the section below and I'll make sure to explain it more efficiently to you guys. For instance, this is a week. From this line here is a week, this line 2 here is a week, this line 2 is a week, this line 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 is a week. WICK, weeks. They are also called shadows of the candle. You know, in the candle anatomy, we have the body. This from here to here is the body. From here to here is the week. From here to here is the week. So the week can be like, for instance, if you are from a daily time frame, the market buys for that day on the daily time frame, but on the 5 minutes time frame, the market gets to a point and starts selling and closes for that day. So the distance between the sell and where the market closes is the week. This is an example I'm just explaining to you guys. So I've showed you guys a practical example. You don't need too much explanation. All you need to know is that this place is a week, this place is a week, this place is a week, this place is a week. Yeah, that's all you guys need to know. So after week rejection, the next one I want to talk about right now is tested and untested zone. What do I mean by a tested zone? You know, in my last video I showed you guys the zones that we're going to be using for trading this support and resistance. The zones we're going to be using are the buy and sell. You know, the buy and the sell, that is the classical apex or classical scenario. The sell and the buy, also a classical scenario. Look at it, sell and buy, that is the V and the A. Then you have the open close or kissing candle. You know, the open close, sell and sell, sell and sell, open close, open close. Then you have your buy and your buy, your buy and your buy, your buy and your buy. That's your open close candle. Yeah, so that's what I talked about in our last video. So now I want to show you guys the difference between a tested and a fresh zone, a fresh and an unfresh zone, or you can call it a tested and an untested zone. So a fresh zone is a zone that a candle has not wicked. That is a zone, either a classical zone or an open close zone, just a support or a resistance zone that the candle has not yet gone up to, or the market hasn't gone up to and touched that zone, or the market hasn't wicked that zone. What do I mean by it? Let's say for instance we have our zone right here. This is a classical apex. If you open your line chart, you're going to be seeing something like this. You know, let's say for instance this is our zone, our classical apex. I showed you guys in the last video. This is our classical apex zone, and we have we drew our line here to this zone. Let's say this is our zone. This is the zone we are using, that we want to use to look for setups, entries, storyline, anything. This is the zone we are looking at. We are looking for. So how do we know the zone is tested or not? Let's say the market has bought, you know, market has bought and has bought, and the market gets to this zone. And once the market gets to this zone, it creates a candle like this. Let's see, when the market gets to this zone, it creates a candle. You know, let's say maybe the market is buying and it creates a sell candle. It creates a sell candle, and when it creates the sell candle, the candle formed a wick, and the wick touched this zone. The wick touched this zone. You see the zone that we are on. You know, let's say this is one of our zone. This is our zone, and the market came down and it was going up, and the market came up and touched this zone. We can say that this zone is untested, and we will not use this zone for any trade. We won't use it to look for storyline. We won't use it to take our setup or nothing. The zone is now useless, obsolete. We can't use the zone anymore. So once you see that the zone is tested, we can't use that zone anymore. That is the definition of a tested zone. An untested zone is a zone that is fresh. That means a zone that the candle has not wicked. That is just the meaning of an untested zone. So let's say for instance the market, you know, gives us a zone and it buys and it buys up. But once it buys up, it now gives us a candle like this. Let's say the market gives us a candle that is like this. You know, This is not a weak zone. This zone is absolutely fresh. You know, I say it's absolutely fresh because it hasn't been wicked by any by a candle of any sort. Look at this. This week, the wick is above the zone. This wick is below the zone. This wick is above the zone, and the candle body too is above the zone. That means this place is still fresh because of it broke. This now leads me to what we call RBS and SBR. What is an RBS? An RBS is resistance becomes support. You know, I told you guys I'll teach you guys about RBS and SBR in our last video. So RBS is resistance becomes support, and SBR is support becomes resistance. What do I mean by resistance becomes support? Let's say for instance, this is a resistance. This line that I drew is a resistance, and as you can see, this candle has broken this line. And in our normal support and resistance analysis, not this advanced support and resistance, the normal usual support and resistance, when a support breaks, it becomes resistance. When a resistance breaks, it becomes support. Guys, resistance becomes support, support becomes resistance. So this is a resistance and it breaks. This candle breaks the resistance, and as the candle broke the resistance, it formed a support. And this zone now is a very fresh zone. This zone is a very fresh zone, and we can use the zone to look for our normal usual entries and storyline and rest. I'm not touching. You guys don't have to worry about entries and storyline right now. I'll teach you guys in the next video. That is storyline. Storyline will be the next video. So the reverse of this situation is the case. Let's say for instance, this is a resistance. The market gave us a V, and we put our zone here. And this candle breaks below. This candle breaks below the zone. And as it breaks below the zone, you know, it didn't weak the zone. As it broke below the zone, we'll be looking for we'll be looking towards this zone for something to happen in the market, so we can get our entries and our storylines from there. That is just the literal meaning of what I'm trying to explain, guys. So let's go to the chart so I can show you guys, and you guys can have like a better understanding and better knowledge and grasp this concept. So if you look at this this market, I want to show you guys a tested zone and an untested zone. First, let's go to the untested zone. This zone up here is an untested zone. This zone right here is very untested. It's a fresh zone, untested. Why did I say it's an untested zone? Because you didn't see anything like a wick coming up here to wick it. A candle hasn't come up here, and a wick hasn't, you know, like tested the zone and, you know, closed below the zone. That's what I mean by an untested zone. Now let me show you guys a typical example of a tested zone. This is a tested zone. You know, I told you open closes are one of the zones we are looking out for. So this is a tested zone. This zone right here is a tested zone. Why did I say this zone is a tested zone? If you look, the day that this candle formed, this candle bought. The candle bought up, and as it bought up, it's after buying up, when it got to this level, it started selling on the lower time frame. It started selling and selling and selling and closed below this zone right here. That means the zone has been tested. It has been wicked. Let me show you guys another tested zone. This zone right here is tested. You know, this is our classical SNR buy and sell. Buy and sell. Classical SNR resistance zone. So this zone has been tested. Why did I say it has been tested? Because the day that this candle formed, the candle after this previous day, look at this green candle here, after this previous day closed, it opened, and after it opened, it sold up, and as it sold up, it didn't close above the zone. After selling up, it came down, sold, and bought up and closed below this zone. So while closing below this zone, you can say that the zone is tested. Let me show you guys another tested zone for you guys to grasp this concept. This is another tested zone. This is our buy and sell, our resistance zone. Buy and sell, resistance zone. So what happened in this zone was that the day that this candle closed here, the candle opened, it bought, and as it bought, it sold and closed here. You see that the candle closed below the zone, weakening the zone. So anytime you see a wick, a candle has weakened the zone, the candle has touched the zone and closed below the zone. That means the candle did not break above the zone. We can say that that zone is tested and we can't use that zone anymore. it is not probable, or is no longer a high probability zone. Though the market can still react from there, but is no longer a high probability zone. Hope you guys get this clearly. Now let me show you guys a broken zone, a zone that is broken, SBR and RBS. So you see this zone right here. This one is a buy and a sell. You see I marked it. It's a buy and a sell. This one is a buy and a sell. It is a resistance. First of all, a clear resistance, because the market bought and it sold, gave us a zone, a resistance zone. So as it gave us that resistance zone, normally we'll be expected that when the market comes to a resistance zone, of course we'll be looking for sales and how to sell. So the market came here to this resistance zone, but when it came here, it didn't weak the zone, it didn't react from the zone. Maybe it gave a little reaction on the lower time frame. It didn't react from the zone. Instead, the candle broke above the zone. If you look at this week, if you look at this candle did not close below this zone. This candle closed above this zone, and as it closed above this zone, we can say that this is a breakout. And once you see a breakout from the zone, we can say that this is no longer a resistance. It has turned to a fresh support, and RBS, a resistance becomes support. And if you look, after breaking this zone the next day, because this is on a daily time frame, after breaking this zone the next day, the candle came down, weaked this zone. You see what I'm talking about, guys? It weaked this zone and it bought. It weaked and gave us a huge reaction from this zone, and it bought up, and okay, it didn't come back here, it missed here, but it weaked this zone and it closed up, which makes the zone an unfresh zone, an unfresh support zone. Guys, I want you guys to get this concept well. It is now an unfresh support zone, but guys, I want to let you know that it is still a fresh resistance zone. Hope you guys get. So there's something we call resistance becomes support, becomes resistance. I hope you guys are understanding this. Resistance becomes support, becomes resistance. When you an LHS is a typical example of resistance becomes support, becomes resistance. So you see that an LHS, this is an LHS here, because you see that the market broke above the zone, it came down and broke the zone again and becomes a resistance. It was a resistance before, it broke, becomes support, tested the zone, went up, came back, broke again. As you can see, it broke again. After breaking again, it came back up and gave a huge reaction to this zone, and it sold here before buying back. So when you see that the market breaks above the zone and tests the zone, you know that okay, this zone has, when you see a market has broken above the zone, you know that this zone now is a fresh if it's a resistance zone, you know that okay, this zone now is a fresh support zone. When it breaks back again, when it's it's a fresh support zone, then once it tests it, it's an fresh support zone. But when it breaks back again, you know that it is now a fresh resistance zone. The same thing goes for support. If you take this concept and apply it to the support, you will get the same result. So guys, I want to show you a little bit of something. You see that I told you that weak zone are not high probability zone. As you can see, this zone weak here, it came up, it became unfresh. This zone was fresh before, it became unfresh here. So you see that the market came down here, it gave a reaction, but the reaction was not that strong because the zone was you can see that the reaction was not that strong because the zone too was not that strong, guys. So guys, I hope you grasp this concept, and I want you guys now to go to your chart, look for this zone, look for tested and untested zones, and practicalize what I'm teaching you. I want you guys to, like, when you just open the chart, I want this to be your second nature, guys, because if this is your second nature, anytime you open the chart, you will be seeing what other people are not seeing in the chart. You'll be seeing these zones, you'll be seeing these tested zones, you'll be seeing your zones. Practice your zones and practice your tested and untested zone, your fresh zone and your LHS and the rest, guys. So guys, if this is your first time in my channel, please and please, I beg you, like and subscribe and be a member of this channel. If you haven't watched my first video on Malaysian SNR, please do well to watch these videos, as I will see you in my next videos. Cheers, guys.